Thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We go into what impacts mortgage rates on a daily basis, whether it's economic calendar, the data that's being reported, or if it's from headline news, or if it's geopolitical, or even just the sentiment on Wall Street that might be impacting rates, and sometimes it doesn't always have any logic behind it. We get into kind of try to get that information out to you so that way if you're in the market looking to refinance or purchase and you're going to be watching rates, that you can hopefully have an educated decision as to what's affecting rates and if you're going to lock in or if you want to kind of hold off on that or not. So, a little bit about myself. I'm a loan officer. I do work with a national lender. We got a lot of great loans and programs. So if you guys are looking for anything, please reach out. We're here to help out. We can help you out with we'd love to earn your business for refinance or purchase. So again, please reach out. In the meantime, we'll start off with our report here. We'll start off with the economic data. And the first one will be the jobless claims that we get every Thursday. So the last week it came in at 351,000 people applying for unemployment for the first time. Forecast was supposed to drop to 335,000, and it came in a little hotter at 362,000. Now, if you look at continued claims, that has dissipated a little bit. So it was at 2.845 million initially last week, and it was revised lower to 2.82, and it came in all the way down to 2.802. So it did drop about 18,000 people on the continued claims. Now, some other important data we got is the GDP, the final revision for the second quarter. So next month we'll get the initial for Q3, which will be interesting because we got the supply chains, bottlenecks and stuff, and we may see that kind of drop a little bit. Now, that came in at 6.6 initially, and forecasters calling for it to remain at 6.6, but it came in at 6.7 for the final Q2 GDP there. So a decent number, but also you got to keep in mind that was propped up due to the stimulus checks that came out, the vaccinations that came out, things reopening a bit. So we had a little bit of a spike there in Q2. So we'll have to kind of watch and see how Q3 does when we had a few interruptions there. Last but not least, we get the business activity in the Chicago area, which is being reported through the Chicago PMI for the month of September. So back in August, it was at 66.8. Forecast was supposed to be a little bit of a dip down to 65, and it dipped a little bit further down to 64.7. Now, this is still a decent number. We'll keep an eye on this, but anything above 50 is considered expansion or optimism. So we still got some room there. It's still doing well, but of course we never like things coming down. Now it was coming off of all-time high of I think it was like 72 or 75. So obviously that would have to kind of cool off at some point, but still a decent number here, even though we're seeing this decline a bit. Now, stuff that's going on in the news right now is kind of affecting the markets. Is investors are kind of watching what's going on with Congress. We had the debt ceiling coming up here pretty soon. Treasury basically said, Yellen basically said that I think it was either October 8th or 15th that we have until we run into problems where we can't pay our bills, and and both sides are digging in pretty deep. They're trying to see if they can somehow put a bill through and extend it through to I think it was December 3rd, but that's being held up within the Democrats' ranks, even within their own ranks, they can't get through the House. So without regards, it is creating a bit of concern on Wall Street. Stocks are down as a result. Part of that, we had Janet Yellen and Powell speaking before a Senate committee today as they spoke through to a congressional or House meeting yesterday. So, and I saw one of them look like Yellen was getting kind of lambasted regarding to the implementation of the rental assistance because like 83% of the funds that were allocated to that are still in the deposits, and they're trying to extend it out to 2025, which doesn't make sense because we're trying to get the money into those people's hands now versus extending it out a couple years from now. So regardless, it was an interesting video out there. Now, we do got rates here. I'm going to start off with the mortgage-backed securities. We'll bring this up a little bit. As you can see here, we start off the morning a little bit lower from where we left off. and we were even down a little bit first. So some lenders priced in right around here have been coming in with some reprices for the better. So some of this may have been a little bit worse than yesterday, but for the most part, pricing should be close to where we left off yesterday. Yesterday, we were fortunate; it did rise a little bit further. I believe it closed up either 19 or 20 basis points, which is obviously good news. Right now, it's up 6 basis points, and like I said earlier, down it's slowly kind of rising up here. So we might get more, hopefully, price improvements for the better than what we had yesterday. So hopefully, we reach the bottom here and kind of working our way, retracing some of those patterns that we had over the last week or so, which was pretty steep, as you can see, especially here. Pretty steep numbers here. So again, a little bit better today. We got some possibilities there, and we'll kind of watch and see what happens there. Then we'll go to treasuries. Sorry about that. Need to kind of put these back in order. And we got treasury. Pretty much the same thing. We got the treasury that was touching way up here off this new trend line, bounced down. Right now we're about 1.51, or just down underneath 1.52. So we started off a little bit higher than where we were yesterday, and trying to get back below this other technical level that we were below yesterday. So yesterday we were down lower, went up. We even touched that new level here. Today we started up a little higher, and then even tested again. But since then we kind of pulled back a little bit and try and test this new level right there as well. So again, rates are right now are unchanged, but this has been slowly kind of improving a little bit. If this could continue that pace, we might see some another rate shift price improvement. So stay tuned. But we're hopefully seeing the bottoming out of where we were before this long decline here, as we were kind of might be in an oversold position here. So hopefully we'll start getting some buyers in there and buying mortgage-backed securities and prop that up back up a little bit. Now we're getting some improvements on our rates here. So you can see here the national average 30-year fixed is at 3.15, and then we got the 15 at 2.59. So as you saw, they have risen over the past week or so in comparison, but today slight improvement. Now these are also, when you look at these national averages, they do have points factored into it. Usually we go by eighths, like 3.125. So just to give you kind of heads up where rates are at. All right, folks. Hopefully this will answer some questions. Help you guys out. Tomorrow we're going to have on the news. We'll have the core PCE, which could be a market mover because that is inflation, and that is a concern. Inflation here. That's the Fed's favorite gauge of inflation, as a matter of fact. Then we got consumer sentiment as well, and then of course we got some manufacturing from the ISM here as well. All right, so those will be going on tomorrow. So stay tuned, and if you guys like the videos, please smash that like button. We greatly appreciate it. Help out the channel here. We thank you very much for your time, and hopefully we'll see you guys tomorrow. Have a great rest of your day. Bye-bye.